India's economy has been centered on scarcity. India is expected to become one of the top three largest consumer markets by 2026. Private consumption is already making up about 60% of India's GDP. So, where are we standing when we look at India's next decade? For years, conversation around India's economy has been centered on scarcity. There's been too few jobs, weak infrastructure, limited spending power. This is the sort of topics a lot of people talk about. But what we're noticing is that story is changing. There's a shift that's happening in one of the largest democracies in the world, the most populous nation that's there. And that isn't just the fact that there is a rapid growth that's happening in output, but we're seeing a shift in consumer preference from demand that is shifting from scarcity towards potentially aspiration and more affluence. This consumption is shifting from people that were earlier purchasing for essentials and things that they really needed to now shifting towards more luxurious, more affluent. And the interesting thing is that this change in preference is more to do with discretionary. It feels that it's more structural in nature. It appears to be a very resilient theme. And barring any major policy mistakes over the next 10 years, it appears that this could be a self-reinforcing theme that could continue India's growth story. So let's look into this today. So where do things stand? Well, the average Indian today spends nearly twice as much as they were way back in 2013 in nominal terms. By 2030, households could be picking up and forming a bulk of the market from a premium perspective. India is expected to become one of the top three largest consumer markets by 2026. And if we expect the nominal GDP to continue to grow roughly at around 11% between the current year and 2030, the expectation is that India will sort of reach a total GDP of around $7.3 trillion. Now, with private consumption being around 60% of the GDP, even minor shifts that we see can create very large markets for the wants that people are showing. And this trend isn't reserved just for the urban markets, just for the tier 1 cities. We are seeing this happen in rural markets, and this demand seems to be sort of converging there as well. One of the core forces driving this trend also appears to be infrastructure, which is a economic force multiplier, a GDP multiplier, and this is being driven by policy. We're seeing state capital, government capital being spent, and that momentum should remain high for the next few years as well. By 2030, we're expecting massive amount of spending to happen in railways, in highways, national highways, in ports, in defense, in many sectors that are core and structural to India's growth. From a GDP multiplier perspective, this is expected to give us roughly around 3.25 times, which is well above the typical 0.45 times that these type of expenditures from governments typically give. What this means is, from a broader perspective, we can expect much more investment to flow into supporting these jobs, cutting down any logistics issues that have been there, supply chain issues, expanding access for the market for many businesses, and that push is going to continue to happen till 2030 at least. One interesting thing to note here is that the per capita income appears to be on track to cross $5,000 by 2030. Now, what that means is that there is, when you look at it historically, if you look at Japan, if you look at South Korea, you look at China, in their respective time periods, they've had this S-curve sort of phenomenon where the share of non-essentials in private consumption sort of starts rising and stays higher. The real difference here, like we spoke about earlier, is that there is this digital infrastructure that is also creeping up and is taking place. And there also appears to be a wider dispersion of this aspirational demand, aspirational consumption coming in beyond the tier 1 cities, from rural cities, from rural districts, from villages, from smaller tier 2, tier 3 cities as well. So that's why this appears to be somewhat of a regime shift that we're seeing, and that trend could continue to gain momentum as well. So from scarcity, we're moving to selectivity in spending. Private consumption, like we spoke about earlier, is already making up about 60% of India's GDP. And that balance of that consumption is also moving quite drastically towards discretionary spending. Household consumption rose from nearly $1 trillion in 2013 to about $2.1 trillion in 2024. So it's doubled in about 10 years. So the non-essentials share of consumption is also improved from 27% to about 36% in the 2020s, and is expected to sort of cross the 40-45% mark by 2030. So as income passes these sort of key thresholds that we've spoken about, families are potentially going to adopt more premium products across multiple categories. They might be spending more on leisure activities or experience-led categories like travel, spa, etc. An important factor to note here is also that India's age dependency ratio is expected to remain quite favorable over the next decade, as you can see from this chart. The working age population is roughly around 980 million people, aged between 15 to 64 in 2024. This could reach and cross the 1 billion mark by about 2033, which means around 70% of our population. Of this, about 712 million are Gen Zs, the millennials. They will be digitally native, globally exposed, potentially even confident about money. So what we're seeing is demand is evolving. It's shifting. Social media and digital is quite important in shaping these preferences, while there is also e-commerce, which is putting brands potentially at a click away for not just metros but even for smaller towns and villages, and all of that is helping lift this discretionary spending that's happening. We'll speak about this a little later as well, but we're seeing investment habits shift as well. Younger generations are entering the investment journey much earlier. We're seeing more mutual fund contributions happening from that category, more equity contribution happening from that category, and what they're doing is essentially laying a very strong foundation for durable, high quality consumption. Like we spoke about earlier, it would be a mistake to say that this consumption story, this affluence story is just happening just in the tier 1 cities. We are seeing rural monthly per capita spending increasing, and this has been happening since 2012. And that sort of gap between urban and rural markets is sort of becoming narrow and narrow. And this is happening because, like we spoke about, infrastructure, as roads become better, as digital infrastructure becomes better, as connectivity becomes better, as the digital access for these rural communities becomes better and improves, more and more rural households are coming into and having that access to purchase in these aspirational categories, and are also opting for this premium first model as an added feature rather than just sort of buying through premium brands. And as we can see in the chart, between 2012 to 2024, rural expenditures and urban expenditures have also grown respectively. The month per capita expenditure gap that's there between rural and urban has sort of fallen from 84% to about 70%. Food wallet share has also dropped from about 60% to 47% in rural areas, and from about 48% to 40% in cities. So what this means is that there's more budget obviously in rural areas but also in urban areas for discretionary spending, and the rural monthly per capita expenditure has increased by about 2.6x, which signals that there is a shift that's happening in this category beyond spending on necessary items. We've been speaking about infrastructure and digital infrastructure specifically, but if you think about it, the actual public infrastructure stack that India has today is quite advanced. We have Aadhaar, we have UPI, you have ONDC, you have a health stack that's coming up, potentially rewiring, discovery, payments, we have data sharing and e-commerce and many other things happening. If you look at the numbers, Aadhaar has nearly 1.4 billion people enrolled, with many authentications happening on a day-to-day basis. UPI is processing nearly 20 billion transactions on a month-on-month basis. 85% of the digital payments volume is coming through the UPI route as well. ONDC has logged hundreds of millions of orders through many sellers being onboarded on their platform as well. E-commerce is growing and has grown from about 135 million to about 250 million in the last 4-5 years, and could reach the sort of 500 million mark by about 2028. And in terms of discovery, what we're seeing is 68% of users are now sort of finding products through social media, through online platforms as well. So digital infrastructure, digital conversion of this aspiration is actually increasing the number of transactions that are happening, and that's happening at a very fast pace. It's happening at scale, and this is expected to continue to grow as the economy sort of progresses forward. Finally, two more important categories. One is banking and credit. And what we're seeing here is that over the last 10-15 years, we've seen significant improvement in the banking account penetration rates across the board. They've doubled from 35% in 2011 to upwards of 70%, 80% in 2021 and 2025. What this means is that it makes it easier to have formal savings. It also means it's easier for people that have access to accounts and have that credit record or banking record to get easier access to credit. Account aggregators, digital payments, all of these are reducing frictions for borrowing to happen as well. One important point here is that mortgage penetration is around 12% of GDP, which means there is significant headroom and sort of growth that can happen from the mortgage front as well. As secured borrowing expands, categories like furniture, electronics, paint, home services, these are the things that typically benefit as well. Mortgage growth is expected to outpace the overall consumer credit as well by about 4 to 5% over the next 10 years. So household savings are large, and what we're seeing is that there is also a shift that's happening in the financial assets. India saves roughly 650 billion a year today. Household savings are large and are shifting into financial assets. Savings across the board from households is increasing. What we're also seeing is, for instance, mutual fund assets are growing. We're seeing monthly SIP contributions hitting upwards of nearly 30,000 crores in September 2025. There is also a wealth effect amplifier that's happening, which is that when portfolios are rising, there is obviously more discretionary spending that's happening, especially when we look at the upper quintile, the upper sort of echelon of households, which typically already were dominating the savings and the household and the premium consumption space. And while this top spending bucket is leading, we're also seeing lower middle households, which are also on track to triple their savings to about $310 billion by about 2035. Mutual funds financial savings are also expected to sort of jump to about 30 billion to roughly 140 billion, depending on the categories we're looking at here, which will essentially mean that we're deepening the wealth that's available for not just essential consumption, but also for this sort of discretionary consumption, this affluent consumption that we're speaking about here. As the equity and the mutual fund base broadens, we see more people are also accessing a lot of these financial investment saving transactions on their phones. And that immediacy of seeing your portfolio, doing a transaction quickly, makes it that there could also be potentially more volatile spending responses as well, based on the returns that you're seeing from any of those investments that you make. So where are we standing when we look at India's next decade? Well, there is this very strong and very prominent theme of aspirational consumption that's coming up. It is being powered by India's young earners, the Indian demographic dividend that's been there for the past few years. Digital public infrastructure is becoming stronger. Digital infrastructure itself is becoming stronger. That access is being improved for rural and urban areas, which means rural demand is also sort of going up as urban demand grows as well. And from a banking and a mortgage perspective, what we're seeing is that banking access, the ability to get more people in on the structured side of things, means that they have more access to credit and credit growth, and that potentially means that could fuel your real estate engine as well. The low penetration that we've seen in many of these big ticket categories means that there is a long runway. When public capex starts spending, which helps reduce time, it reduces transportation costs, it improves the overall livelihoods and sort of livability of people in the country, that can potentially also boost the real purchasing power that's there. So we are seeing consumption move from scarcity to aspiration, and that trend is gaining momentum. So are you tracking this growing theme? If you're not, do try to watchlist our consumption portfolio to see how exactly this theme among the other consumption themes are sort of playing out. Do like, comment, share and subscribe. Let us know what else you want us to cover in the comments below. As always, happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.